Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, Wednesday, August 16th. And Ken, looked kind of bearish out there today as this market pullback continues.
Yeah, really the second straight session where during that final hour of trading, you got sellers picking up the pace. So not a great close today, not a great close yesterday. It looks like we got yet another distribution day for the Nasdaq. But, it's getting harder and harder to find, decent looking stocks out there, but we somehow managed to come up with three. So from Brazil, let's take a look at XP, and the symbol there is XP. Another stock, a specialty materials and components company, ATI. Ticker symbol there is ATI, and in the oil and gas space, Chart Industries, GTLS.
Let's do it. But first, let's take a look at those major indexes. The Nasdaq today down nearly 1.2% and looking like it closed basically at the day's lows. The S&P 500 down 0.75% today. The Dow down 0.5%, and the Russell 2000 down some 1.1% today. So is it starting to look more decisive, Ken? I mean, the Nasdaq below the last couple of days' lows and our early July levels. It seems like next stop to maybe try to find support would be this 626 low. But
Yeah.
your thoughts on how we closed here?
Yeah, well, not a great close, and really the Nasdaq took out Monday's low with relative ease today. You can see the volume picked up the pace quite a bit. So we're talking now 5 distribution days in the past 11 trading sessions. So we talk about how when distribution days start to cluster, it almost always causes problems for an uptrend, and so we're kind of seeing that play out right now. A couple things that the bulls are kind of hanging their hat on is one, the Nasdaq is quite oversold now. When you look at short-term oscillators, it's kind of getting down to a level we saw back in March, right when stocks bottom. So we're kind of just watching that, recognizing that the Nasdaq is quite oversold. And then, this morning we got the latest reading from Investors Intelligence, which monitors newsletter writer sentiment, and it's a contrarian indicator. So when you get newsletter writers that are really, really bullish, that usually happens at market tops, and when they're really, really bearish, that normally happens near market bottom. So the crowd is often wrong when it comes to timing the market. But we had bullish sentiment drop off a cliff for 2 straight weeks. So we had excessive bullishness 2 weeks ago at a level that we saw back in November 2021 before a pretty sharp pullback. So bullish sentiment has fallen off a cliff for two straight weeks. So
It's now things at 47, right?
That's right. Yeah.
Right. So it's not quite showing up. So I'll just draw the line there. That's basically what the bar would look like.
Exactly. So those are 2 things. Our uptrend is still under pressure here. Obviously, we're seeing a lot of weak action and a lot of leading stocks. That's been going on for some time. So it's really the time to be raising cash if you haven't already, and really avoiding new buys unless you have a very short term trading mentality and you're holding stocks for a few days or a week or 2. Traders can do okay in a market like this, but new buys generally are going to have a hard time making headway.
So with this looking like it could be the second week below the 10-week line for the Nasdaq, with this bull market into the early stages, can we say that, Ken, or is it looking more like we might enter some sort of choppy period? What's your assessment?
Well, I mean, if you just look at the action in individual stocks, you've got, I know you and Ed have been talking about Nvidia. That's certainly a stock to be watching in this market, and you can see it's just barely clinging to the 10-week moving average here. So it's not a broken stock by any means, and it's still kind of trying to find support here. But the weak action in leading growth stocks, the selling has really gone into a lot of different areas of the market too. We've still got the home builders that are holding up well, some oil and gas stocks. but there's been broad-based weakness. So I don't know where the market is going to go from here, but the Nasdaq is under some pretty significant distribution right now, and that typically is not a good sign. And a lot of stocks acting poorly. So just step back and get out of the market's way here.
Let's also take a look at the S&P 500. It too joining the Nasdaq below the 50-day line, and it is now about 1.2% below the 10-week line. Still holding above a longer-term trend, but if you look at the shorter-term ascent, it does look like we are undercutting that. Perhaps a resting spot for the S&P 500 would be around this 43.25 level, Ken, but still a little bit of room if we were to pull down further to get that test to happen.
Yeah, well, the one thing, silver lining for the S&P 500 today is that there wasn't a whole lot of volume behind the decline. So while we saw very heavy volume in tech stocks and the Nasdaq, it looks like we're going to get lower volume. It's a very close call, but it looks to be lower. So we would avoid a distribution day for the S&P 500. Yeah, and we'll have to see. Again, we're looking at an oversold market here, so there's going to be a bounce at some point. But if it's a bounce in light volume, if it's a bounce with no conviction, you really have to treat it with a grain of salt, because if you get these higher volume declines and then lower volume gains on a bounce, that often sets the stage for more downside. Now, if we see some conviction behind the buying in coming days, if we see a bounce and volume really explodes, that would be slightly different. But so higher volume declines, going to keep a watch out for lower volume gains, because that tends to happen when you're in the early stages of a distribution phase.
Right. I'm going to quickly go through some ETFs here, and then we can get to those three stocks. So a quick look at the Dow. Here's DIA. Further erosion below that 21-day line, still holding above the 50-day line, but it too not immune to the selling as of late. And here's IWN. Looks like quite a bit of destruction today in the small caps after round tripping from that breakout area, continuing to decline. Now quite a bit below that 50-day line. We can also take a look at UUP. This is the dollar above that 28.70-ish level that previously was resistance. And then, of course, the 10-year yield also on the rise, Ken.
Yeah, rising bond yields, strengthening U.S. dollar, that has really turned into quite a hindrance for stocks here. So we'll see where the 10-year yield goes from here. We did have the minutes that came out from the late July Fed meeting, and we found out that Fed members are still concerned about stubbornly high inflation, and if rates are going to have to stay higher for longer. The market's still not convinced that there's going to be another rate hike this year. There's maybe a 35% chance or something like that. So we could get one more rate hike before the end of the year. I know the Fed wants to be careful about over tightening. So but the minutes just kind of showed that Fed members are still worried about inflation, and that they may have to raise rates further to get it down, to that 2% level that they want to see.
Let's go to XP, Ken. What are you seeing here?
Well, I'm seeing a stock holding up well in a very weak market. So particularly on we're looking at a daily chart here, you can see it's still holding above that 50-day moving average, the key support level. And on the weekly chart, in fact, all three stocks that we're going to talk about today are showing pretty good action at this support level. So XP was actually higher, was showing a weekly gain before the market really started to tail off during the final hour of trading. Still holding support here. You see multiple up weeks in a row in very heavy volume. This is a brokerage. They provide low fee financial products and services in Brazil. So a lot of up weeks in heavy volume, and a good solid test of the 10-week moving average here. So in a healthy market, normally this would be a buy opportunity. But we're in a market that's under distribution, so really new buys, you really need to tread cautiously with them and have a tight stop. But so far, liking the not only the technicals but the fundamentals for this company as well.
Now go to ATI in the steel space, also finding support at its 10-week line.
Yeah, really like the look of this one too. This is a specialty materials and components company. They're in titanium, cobalt, but here you have the 10-week moving average that's kind of sitting right near that last buy area where the stock broke out of this consolidation. So it's a good test going on right now. A couple of weeks ago, you had higher volume when the stock came down to its 10-week line, and now it's trying to find support, but volume hasn't come into the stock yet. But this is another name that's acting well in a weak in a weak market. Industry Group has got a pretty decent rank, so we'll see if support holds here. Again, just got to be very cautious with new buys when the market tide is flowing negative like it is. It's tough for just about all stocks to make headway.
Okay. And then GTLS, we want to cover oil and gas machinery equipment group finding support at its 10-week
Yeah, that
after a
was
breakout.
the kind of the theme here, and these are the types of stocks you want to be paying attention to. We're still seeing outperformance in a lot of oil and gas stocks, and this one looks good as well. They're a provider of machinery and equipment. Um, nice breakout, several up weeks in a row, and then just kind of an orderly pullback here to the 10-week moving average. So we have three stocks today that are showing technical strength, but we're in a market that has just gotten a lot weaker, and it's just a classic distribution phase for the Nasdaq. Not so much for the S&P 500, but we see the S&P 500 below its 50-day moving average too. So we'll see what tomorrow brings. But again, we all these higher volume declines. We want to see some conviction behind the buying if we start to rally. If it's
Right.
coming in low volume without much conviction, it's still have to look at it as a market that's under some distribution here.
Yep. Makes sense, Ken. Thank you so much. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live, for all those details. We'll see you there, and we'll also see you right back here tomorrow at the close.